Welcome to the mini Thunderdome. Welcome to the channel. If you're new, please subscribe. Click on the notification so you get notified when I go live or when I upload a new video. If you learned something, please click on the thumbs up. Doesn't cost you anything, and you'll be helping other traders find this channel or this video. Help each other out. This is why I'm here. All right, several things to talk about. First thing is that if you want to try an evaluation, or if you're an evaluation or PA not doing well, Apex has their 90% off. It's back. It started yesterday and it's good till November 7th. It ends at midnight your local time, or 11:59 your local time on the 7th. If you're on an evaluation not doing well, or a PA, never reset. Always, if you're within a what about that? If you are within a discount window, always cancel out and restart a new evaluation. Only do a full hard reset if there's no discounts. All right. So if you want to try evaluation, under the video it says more. Click on that. A drop down menu will appear. Have a discount code. It is good at any time. They will always give you a discount if you use my code. It'll either be 50, 80, or 90. Right now it's 90 till the 7th. All right, let's get into it. All right, so look at my notes here so I don't start blabbing. All right, let's talk about profit targets. Okay, profit targets. So not only do I have a profit target, but I have a soft profit target. What is a soft? I think I'm the only one that talks about this. I don't know. I've never heard anyone else talk about it, but I'm sure they do it, but I've never learned from anyone else. I learned on my own. So I created myself a soft profit target. It's not an actual number. So I'm going to use an example of $500, okay? So I make $500, shut it off, I'm done, okay? Now, if I made 350 and it was a hard 350, either the market was not giving it up easy, I'm not feeling well, I'm not getting a good read in the market, I stop. I am happy with that amount because I know you've been there, because I've been there. You got a 500 target, you're at 480. Oh, $20 more. You take one more trade, starts to go the other way. You start to FOMO, you start to revenge trade. All of a sudden, you gave all that profit back, and now you're going negative. Now you're negative 500 instead of your positive 480. Okay, I know you've been there because I have. So have your soft target. It doesn't have to be a number, but it has to be a feeling when you know, okay, you know what? All right, I'm done. I'm done. But you cannot feel bad. You cannot go back and later. You can't like have a soft target. You get out and you got out early because you got scared that the market was not going to go to your target, and then you reopen your charts later and you're like, oh, I could have made another $800. Well, you have to learn how to be content. So be content, be happy. Okay, so figure out what your soft target is. Now, chasing losses, that is something else that's very important. Everybody goes through it. So okay, let's use the okay. So you have a target of 500, and either you went crazy one day and you lost 1,000, or you have accumulated losses up to 1,000. Because if you have a target of 500, then your loss limit should be less than 250. It should be half. It should only be 100, but most people don't follow that rule. But it should be 100. But if you're at 250, should be at least 250 if you're at 500. But let's say you're down $1,000 bucks, and you go and you start to trade, and now you're up that 480 or 500. Stop, because now you are at your profit target. It's gonna say green, you're up 480 or 500, but most people are still seeing the negative. They're still seeing, I still need to make 520, I still need to make 500. No, you're positive 480 or 500 bucks. Stop. End your day. You don't have to make it back in one swoop. You don't have to be the hero. Oh, I made it back all in one day. No, chip your way back to profits. Get back into, forget about what you lost and start focusing on what you are gaining. This is crucial to being a profitable trader. This is crucial. Okay? You have to forget how much you have lost. And this is why I don't do it, but I know a lot of people that do it. They have either point or percentages showing when they're on a trade, not money. Not I'm negative 100. I'm negative 3 points, 3%. And don't look at your P&L while you're trading. But obviously, keep track. Okay, I've had 3 losses in a row. I should end my day. Especially because you should have an ATM strategy set at a stop, and then you start in your mind adding your stops. Okay, so I've had 10 plus 10 plus 10 and 3 losses. That's 30 ticks. I'm in my limit. But while you're trading, while you're a beginner or intermediate, don't focus on your P&L, okay? And when you start to make your money back, stop at either your soft profit target or your daily. This is how you become a profitable trader. Use this technique, and I guarantee you'll start to see a turnaround on your P&L. All right, next. All right, let's talk about, I say this all the time, and you'll hear me saying 1,000 times, so I apologize. Keep hearing it, but this needs to be muscle memory. Before you enter any trade, you must have a target. You must have a destination. Do not enter a trade just because you think, oh, it's going down or it's going up. Where is it going down to? Where is it going up to? And you can only do this with doing your homework, okay? Excuse me 1 second. Do your homework. Have your targets, based on whatever support and resistance, Fibonacci levels, whatever it is. Before you enter, either going long or going short, have your targets in your chart. All right. Next, let's see. All right. You gotta always do your homework. Right? If you're gonna be a profitable trader, you need to put your, I call it, not I, but many people call it screen time. You need to put enough time. If you're a moonlight trader, you're only able to put an hour a day. Don't be upset if you're not seeing profits within a year or 2 years or 3 years. Don't, because you're not putting enough time. They say to be an expert in anything, you need to put 10,000 hours. That is the average. I don't know who came up with that, but that is known that if you want to be good at anything, if you want to be an expert, you got to have a minimum of 10,000 hours. So if you're putting 1 hour a day, how can you expect to be profitable when you're going against the smartest people? You're going against the people that have the most information in the world when it comes as far as trading and finances, okay? So put in the hour, do your homework, right? So I look, when I'm done trading, I take a break. I do this full time. So I take a break, and then at the end of the day, And when the market opens up again, I go and I start looking to see what the market did and what I can expect for tomorrow. And then I do the same thing in the morning. Why? Because there was the overnight. So if you don't already know, I only trade crude. That is the WTI sweet crude. Oil, it comes out of the ground in various, what is it called? Thickness. There's a name to it, and I can't recall now. What is it? Starts with a V. I don't know. But the gasoline that you buy at the pump comes from light sweet crude. The best is actually out of think of the Gulf of Mexico or Texas is the best. So that is what you're buying at the pump, and that is what the whole world trades. It's CL is the big contract, and then there's QCL, which is the mini, and the micro is MCL. If you got a valuation smaller than 100 grand, I suggest trading the MCL. If you got a live account, if it's smaller than $10,000, also trade the MCL until you're comfortable enough, then go up to the CL. All right, so then in the morning, because CL is traded worldwide, even though the other indexes are also traded worldwide, crude, the whole world buys oil. So it has a better movement at night. It doesn't have as much volume and liquidity as during the cash pit. The cash pit, the market is the New York Stock Exchange, and that is traded from 9 a.m. all the way till 2:30. It closes at 2:30, the cash pit, but it's still open until the end of the regular trading day, which is 5 o'clock. But after 2:30, it dies out. I suggest not trading, even though today there was some action, which I'm going to have to go over and rethink my tomorrow, because I already had an expectation for tomorrow, but the way that it moved in the after cash, I may have to change. All right, so then in the morning, I look at the overnight. What did it do? Where did it fail? All right, let's start looking at some charts here. Hold on. Let me go and switch. All right. All right, let me open the chart here. All right. This is a daily. So first thing I look at is a daily. What is the market trying to do? How good of a job is it doing? So on Tuesday, I told my subscriber that Wednesday was going to be an inside day. I was expecting a choppy day. Inside day is when the market goes and trends within the previous day's range. So the previous day range here would have been open and close within this daily candle here. So not make a new high, not make a new low. So I told everybody, be careful, because that's what I'm expecting tomorrow. It was not so. But I think they took advantage of a geopolitical news coming out of Israel. So I've been telling all of my traders that I'm looking for 80. I'm getting that through my technical analysis and also from discussing with other professional traders. Everybody's looking for 80, but my personal opinion is that it's going to stop at exactly. I'm going to even put it out there. 80.57. 80.57. I think if it keeps going down, that's where it's going to go. All right, 80.57. That's where I think it will stop. So I told my subscriber that we're going to eventually work its way back to 80, but tomorrow's going to be inside day, especially because there's a report on Thursday and Friday. So big moves down, consolidate inside day, and then start to make a move. But because of this right here, I start to say, okay, maybe things have changed. Maybe because of how it took 82. All right, let me open here. 5 minutes. The way that it took 82, that could have been a clue that it might have been over. I was even on a long and I got stopped out. So the way it took 82 to me is like, okay, they took the opportunity to come back down, hit it, and then boom, we're done. We're buying. We're done. We got close enough, and it's cheap. I think 82 is cheap. I am buying. So before the day even started, I had an up target of 84.50, a down target of 83.26, and a down target of 83.03. So again, I thought the market was going to start to chop its way down, and seeing this all at once, I was like, oh man, look at that. We could be done. So then I told all my subscribers, I said, okay, be careful. We could be done. We may not see that 80. And then I saw it take my 84.50, and then I saw the market end at 85.53. I was like, whoa, things may have changed. Even though in the morning I said, okay, we're only negative 40, but we're still at a level that it could still turn around and we'll see at least 84. I was expecting to see inside out again within the range of Tuesday. I was expecting to see at least 84. I was like, that's why I went long here, and I got stopped. I was like, what? So, but 85.50 to me was like, okay, things may have changed, but I can't be stuck on a bias. So I had already predicted. Well, expected. I mean, I can't expect anything, and who am I to predict? So I thought, okay, I'm not gonna be stuck on a bias. I think it's gonna be another inside day. I am not gonna get up in my regular morning time, my morning routine. So I'm going to move my camera a little bit this way. I'm going to get up a little later, not going to be in a rush, and I'll slowly start looking at the market. So first thing I do in the morning, I look at the overnight because it is a market that moves. I already talked about it. It moves in the overnight. And I see, oh my God, it failed to keep going. It made a weak new high, and that was already at the opening. So it opened here at 3 o'clock. It went to try to make a new high. It did, was a weak new high, and immediately started to fail. Then it failed really bad. It found buyers, and again, it failed to make a new high and immediately sold off. So this to me is all a clue. Okay, the market is rejecting 85.50. It can't hold, it can't find new buyers there. So all of this is a clue. And then I see an 82.50. It's like, oh my God. So here we are, choppy day. I was expecting that. So take it easy. No rush. I believe I took my first trades. I think it was around here. But before that, I saw that the market had done what I think it was at that time a weak low. I thought, okay, this will have to be, not have to, but it should be in a perfect world revisited because it found support here, but it was all weak support, and it tried to go down. It found buyers, and I believe because it found buyers because of just the level, the level. They're just buying at 83. It's a century number, and it picked up momentum, and it went up. And then I started to see that so now I'm looking for patterns, right? So now the way I trade, I look for support and resistance, and I look for Fibonacci and then Elliot wave patterns. You know what Elliot wave is? That is when the market makes movements up that are either an A, B, C. Let me put on the chart. So I will either do an A, B, and a C, or this will turn into a wave 3, wave 4, wave 5. Anywhere here, here, or here, it's a wave 5. Okay? And it keeps doing these patterns, but it could also be to the downside. It's not only up. Okay? So, oops. It will do the same thing to the downside. And then, okay? Oh, that should have been a line down. Okay? So that is how I trade. So I started to see a pattern that it was starting to find support in this area here. Right? So this is from the opening. Market opens at 6 o'clock my time. I'm on the West Coast. So I believe I started to go short. Can't recall what my trades were. But I believe I started to go short and I made some money, and then then, you know, I'm so used to Fibonacci, I can't tell you where to start placing your beginning and your end, because it all depends in the time frame that you're looking at. So, you know, it could be from this high, it could be from this, it could be from this low. You have to figure out what works for you. But in my mind, when it started to reach in here, I knew that it was starting to get overbought. So I knew that this level here was overbought. So then all right, I wasn't planning on showing my trades because that's what this channel is. It's not about my trades, but it'll make it a lot easier if I show my trades. Hopefully this will not add too much time here. I don't want to keep you guys too long. It's already been 20 minutes. All right. Look at that. I took a lot of trades. Oof. Okay, so let's see. 7 o'clock. I started streaming here. So I already started to go short. I saw that it was finding resistance every time that it went up. There was selling pressure. Selling pressure. It wasn't so selling pressure in a candlestick is where it opened, where it closed, where it opened, where it went, and then where it closed. So a wick is pressure. So it didn't close higher than where it opened. It closed lower, so it created a wick, and that's the opposite on the other side also. So then I started to go short, and I think I made money here. Where did I go? Entry, and then I got stopped out, and I was almost at my loss limit here. But I was sticking to what I was seeing. In every market, they will try to trick you and fool you. They go and put traps. If you're a seller, they'll go and make it look like buyers are coming in, and the opposite. So in my mind, they're setting up traps, and I'm not gonna fall for it, and I'm gonna stick to what I'm seeing, not what they want me to see. Okay, so then I got stopped out here. I went short again, made some of my money back, but it was only a 2 lot. I believe I was short 3, so I wasn't able to make all of my money back. And then I went short again. No, I thought I was going short, and I went long, and I did a happy I call it a happy mistake. I was supposed to go short and I went long and I made money. And then I went short again and I got stopped out. But I'm starting to see a pattern. I'm starting to see a pattern of outside in, outside in, outside in, and I went with it. I gotta be honest, it is the time that I usually fail. I usually get caught up in the chop and I lose money. But today it was obvious. That's why I actually decided to make this video, because I wanted to show that if you're able to step back, how do you step back? You go and look at a higher time frame. So I'm always looking at 3 time frames. You choose whatever works for you. I'll give an example. Do a 15 and then either do a 7 or a 5 and then either do a 3 or a 2. So you're looking at, and you want to have at least 2 correlate. So I'm just going to use the one here, but I started to see that the market was finding support here and finding resistance here. So I just went with it. You know, I would think it was here. I started to go down and clear, go back up, add, clear, back up, clear, and then I added again. But I have my targets. This whole time I'm telling my subscriber I have a target of 56, I have a target of 36, and then eventually hit that week new low. Not new, but the week low. And I stuck to it, and I went from almost my max loss of the day to walking out with amazing profits that I don't even have to go and trade tomorrow. And if you're going to trade tomorrow, be careful, because it might be very choppy, might be a dangerous day to trade crude. Especially the other indexes too. I believe they were down 50 points today. So be careful, because it either is going to keep going or it's going to pull back to a number that you don't expect. So be careful on the day after a big move, because you don't know if they're going to keep going or pull back. So be very careful. And here I'll show you the last trades here. Or I don't have to, but yeah. So I was able to go and clear. I call a front running, is being the front of the line. Let's say there's a target at 60, going down. I'm going to front run. I'm going to exit at 62. So I front run 56. I exited at 59. Then I left my solid target at 36. I was already in profit. I didn't want to deal with a pullback. Again, you have to have your targets, because with your targets, you figured out areas that the market may turn around and not finish your runner. So I didn't want to deal with 36 to me is a solid number. I don't want to deal with a pullback, leaving money on the table, or me, I had my stop at entry. I don't want to have, they're just fooling me again. Then I raise the stop and stop me out. And now, not only did I give that, I didn't take the profits away, but now it's eating up into my profits. So I decided to exit at 36, and I had a beautiful day. Yeah. So that's it. Look for how good of a job is the market doing. How good of a job was it of making new lows here, new highs here? Both were weak, but I also started to think, okay, what time of the day is it? It's a time of the day that if the market was going to go and start going for these new highs, it's going to start ripping. And every time it kept on getting knocked down. It would go back up, it would find support, and then it would go all the way back up again and fail to make a new high. And we are running out of time, cash pit time. And eventually the market is going to go and hit that support and knock that door down and go boom all the way down. And I wrote it down. That's it. So look for patterns. Try to figure out how good of a job it's trying to do what it's doing. Be open to being wrong, because our monkey brain wants to tell us that we're smart, that trading makes us feel good and we're smart and we are the very few people in the world that can't trade. And if you're wrong, then you feel stupid. So I always say it doesn't come from me, but I think comes from either Napoleon or from Alexander the Great. Lose the battle, but don't lose the war, right? So lose your local battle, but don't lose World War II, right? So losing World War II would be blowing your account. Losing a day, having a losing day, it's okay. But if you're gonna FOMO revenge trade and break, go and blow your account, then you're losing the war, and you have no way to come back from losing a war, right? Unless you keep pumping money into it, and then you keep making the same mistakes. It just creates this whirlwind of, repeating the same mistakes. All right, guys, I'm done here. If you learned anything, please hit like, hit subscribe. Join me every Tuesday for my live streaming starting at 11:30 Eastern Standard Time, 8:30 here in the Pacific. I stream for an hour every Tuesday. If you hit that subscribe and that bell, you get a notification of when I'm going live. I post videos, I think about 2 times a week now. So yeah, thanks for watching. Hopefully you got something from it. Hit that like. All right, I'll see you live in the Thunderdome. Have a great rest of your day.